Welcome to the Deep Dive. We're the show that, cuts through the noise and gets right to the core insights, just for you. Today, we're jumping into some really fresh financial news from a major Indian player, Vimta Labs Limited. They're a big name in the contract research and testing organization space, the CRTO industry. Basically, they're the folks ensuring lots of products are safe and effective behind the scenes. So, we've got their Q1 FY26 unaudited results, just out July 17th, 2025, and an updated investor presentation from the 18th. Our goal here: to pull out the most important bits, give you a clear, concise view of how Vimta's doing, their strategy, and what's next. Okay, let's unpack this and see what stands out for you. All right, let's kick things off with the headline numbers, the big picture metrics for Q1 FY26. And honestly, right off the bat, it looks like pretty strong growth. Total income for the quarter hit 993 million Indian rupees. Just to put that in perspective, that's a pretty significant 31.4% increase year over year compared to Q1 last year. And it's also up 3.3% from the previous quarter, Q4 FY25. So good momentum there.
Then there's EBITDA, that's earnings before interest, taxes, depreciation, and amortization, a key measure of operational profitability. That came in at 354 million rupees for Q1. That's up 33.1% from the same quarter last year. And what's interesting is the EBITDA margin, it held really steady at 35.7%.
Right. That consistency in the margin, around 36%, even with rising income, is quite telling.
What does it tell you?
Well, it suggests good cost control. They're managing their operations efficiently as they scale up. It's not just growth at any cost.
Makes sense. Okay, let's look further down the line. Profit after tax, or PT, from their continuing operations, that reached 189 million rupees. And again, you see strong year-over-year growth here, up 35.9%, and also a decent 3.1% bump from the last quarter. Their PAT margin was solid too at 19.0%.
Yeah, very solid, consistent again with previous periods.
And just quickly, profit before tax, PBT, was 253 million, also showing strong year-over-year growth, 39.0%, which leads us to earnings per share, the basic EPS. That landed at 4.2 rupees for the quarter.
Which is another big jump, right? 35.5% year over year.
Exactly, and up 2.4% from Q4. So across the board, income, profit, earnings, it's looking positive.
What's fascinating here, as you pointed out, is the consistent positive movement across all these core financial indicators, especially that strong year-over-year growth. It really suggests robust underlying business activity. For a company in the CRTO sector, this kind of consistent performance across income, EBITDA, PAT, EPS, it points to, well, strong execution and healthy demand.
Right. It's not just one metric slashing green. So that naturally leads to the next question. Why? What's driving this? Here's where it gets really interesting. What propelled these strong financial results? The company explicitly states that the revenue growth was primarily, and I quote, driven by pharmaceutical and food contract research and testing services.
And that makes perfect sense given their market position. Those are huge, highly regulated areas where trust and quality are paramount. But it's not just about the revenue volume, it's the quality story behind it. We need to talk about their recent compliance wins.
Yes, the regulatory side. What happened there?
Well, first, they had a US FDA Good Clinical Practice, that's a GCP inspection, and the result: zero Form 483 observations.
Zero. Okay, explain that. Is that common?
No, not at all. A Form 483 is basically the FDA inspector's list of observations that might indicate violations of regulatory requirements. Getting zero is, frankly, exceptional. It's a huge validation of their clinical trial processes and data integrity. Very few companies achieve that.
Wow. Okay, so a big tick from the US FDA. Anything else?
Yes. They also received a CGMP compliance letter from ANSM.
ANSM.
That's the French regulatory agency, part of the European Medicines Agency network. CGMP means Current Good Manufacturing Practices. So this letter confirms their manufacturing and quality control systems meet the stringent European standards for pharma products.
So approvals or positive marks from both US and EU authorities.
Precisely. And if we connect this to the bigger picture, these outcomes aren't just, ticking boxes. They are a powerful signal of the company's deep commitment to quality, to scientific rigor. And in this industry, that's absolutely critical for building trust and winning business, especially internationally.
Got it. Quality and compliance are clearly central. What about other strategic moves? Anything for shareholders?
Yes, definitely. The board approved a 1-for-1 bonus issue. So shareholders got 1 extra share for every share they held.
Right, which effectively doubles the number of shares outstanding.
And what does that typically signify?
Well, it usually shows a few things. The company feels it's in a strong financial position, it's confident about future growth, and it wants to reward its shareholders. It can also increase the liquidity of the stock, make it perhaps seem more affordable per share.
They actually allotted over 22 million new shares back in June 2025, and they adjusted the previous EPS figures to match, which is standard practice. They also granted nearly 43,000 employee stock options in July.
Aligning employee interests with shareholder value. A common and generally positive move.
And a small corporate governance note. They appointed a new cost auditor, Mrs. Lavagna and Associates LLP, because the previous auditor changed its structure from a sole proprietorship to an LLP. Just a procedural detail, really. But sticking with strategic moves, there's the divestment we should touch on.
Ah, yes, the sale of the diagnostics business.
Exactly. They sold and transferred their diagnostic and pathological services business to ThyroCare Technologies. That deal closed back in October 2024.
So why do that? Why sell off a part of the business?
It often signifies a strategic decision to streamline, to focus resources, capital, management attention on the core business segments where they see the most growth potential or have the strongest competitive advantage, like the pharma and food testing we just talked about.
And that's why the financials we discussed are specifically labeled from continuing operations.
Right.
To exclude that sold-off part.
Precisely. It ensures comparability, so you're looking at the performance of the core ongoing business. It's a deliberate strategic refinement.
Makes sense. And one more thing, that public-private partnership, the PPP with FSS AI, that seems interesting too, setting up a national food lab in Mumbai.
Yes, that's a longer-term play. Signed in 2021, it involves setting up the lab and then operating it for a period before transferring it. It shows their deep involvement in the national food safety infrastructure. And they're accounting for it sensibly, separating the setup revenue from the ongoing operations revenue.
Okay, so we've got the numbers, the strategy, the compliance wins. Let's zoom in on what Vimta Labs actually does, this leading contract research and testing organization. What services are we talking about day to day? It seems pretty broad. Drug discovery and development is a big one.
Right. That includes pharmaceutical analytical testing, clinical research services, and preclinical research, the whole pipeline, really.
Then there's food and agri testing, electronics and electricals testing and certification,
Yeah.
and environment testing and consultancy.
A wide range, definitely. But covering critical safety and quality aspects across major industries.
Though for reporting, they bundle it all into one segment: contract research and testing services.
Yeah, that's common for financial reporting simplicity. But the real story is their strength in each of those areas.
Let's talk about that competitive edge.
Yeah.
What makes them stand out?
Well, the sources point to several things. First, their lab infrastructure is apparently top tier, over 600,000 square feet, including a gold LEED certified vivarium.
A vivarium for animal research. And Gold 80 means it's environmentally friendly.
Exactly. It signifies high standards in both research practices and sustainability. It's not just about having space. It's about the quality of that space and the ethical considerations. This massive, high-quality infrastructure underpins everything else.
You mentioned their regulatory track record earlier.
Yes, that's crucial. Decades of successful inspections and approvals from major global bodies like the US FDA, the EMA in Europe, OECD, GLP. That history builds immense credibility.
So infrastructure plus regulatory trust, how does that translate to market position?
It translates directly into leadership. Look at the specifics. Pharma Analytical. They're #1 in India. They serve 95% of India's top 50 pharma companies, and nearly 40% of that revenue comes from overseas.
Wow, 95% of the top 50. That's dominant.
It is. Clinical research. Among the most reputed in India, and impressively, 75% of that business is international.
Okay, so very strong global reach in clinical.
Then food testing, again, #1 in India, serving 16 of the top 20 food companies. And here's a key differentiator. They are apparently the only private lab in India approved by the EU Commission for food testing.
The only one. That's a significant advantage for exporters, I imagine.
Absolutely. It streamlines access to the EU market for their clients.
What about the other areas?
Electronics and electricals, they're a leading provider for EMI/MC testing in India. And in preclinical and environment testing, they're ranked among the top 5 players in the country.
So market leadership across multiple verticals.
Yes. And it's built on more than just labs and approvals. It's continuous service innovation, a large team of over 1,300 skilled professionals using state-of-the-art tech, and a real focus on customer relationships building long-term partnerships.
That paints a very strong picture of their current position. Now, let's zoom out again. What about the market itself, the environment they operate in? How is Vimta Labs positioning itself for what's coming next?
Well, the market opportunity, both globally and in India, looks extremely promising for the services Vimta offers. The numbers are huge. Global pharma analytical testing, for instance, projected near $10 billion soon. Food testing heading towards $15 billion globally by 2030. Environment testing over $14 billion by 2034.
Big numbers. And India specifically.
The Indian market opportunity is also set for massive growth. The sources suggest it could more than double, from around 830 million now to nearly 1.8 billion in the coming years.
What's driving all that growth?
It's a confluence of factors, really. In pharma, you've got constant pressure for new drugs, including complex things like biologics and vaccines. Plus, regulations are always getting stricter, demanding more rigorous testing.
Which plays right into the hands of specialized CRTOs like Vimta.
Exactly. They have the expertise and equipment that many pharma companies don't maintain in-house or prefer to outsource. Then in electronics, you have government initiatives like Make in India, boosting domestic production, plus the whole global push towards green tech, like EVs, which all require extensive testing and certification.
Right, safety and performance standards are key there.
Definitely. For food, it's growing populations, rising consumer awareness about safety, and constantly evolving regulations both in India and internationally. Again, driving demand for independent, reliable testing.
And environmental testing.
Growing awareness and regulation around pollution, air, water, soil. Companies need to monitor and prove compliance. It's a sector with strong, long-term drivers.
So, multiple powerful tailwinds pushing demand for their services. How is Vimta planning to capture that? What's their way forward?
Well, the investor presentation outlines it clearly. They're focused on capacity expansion, building more labs, getting more equipment to meet that demand. They're talking service innovation, staying ahead of the curve, penetrating new geographical markets, deepening those customer partnerships we mentioned earlier.
Right. Plus, operational excellence, hiring the right people, and critically, maintaining that strong quality and compliance culture.
That culture seems non-negotiable for them.
It appears so. They also mention investing in cutting-edge tech, maintaining good corporate governance, and always learning from what customers need. It sounds like a comprehensive growth plan.
It does. And importantly, they seem to have the financial health to back it up.
Yeah, the balance sheet looks pretty clean. You mentioned relatively low debt, right?
That's right. Total debt around 70 million rupees, but cash and equivalents of about 150 million. So they have net cash.
Which gives them flexibility to invest in these growth plans. Their market cap is around 2,000 crore rupees currently.
A solid valuation reflecting that performance and potential.
Okay, so wrapping up this deep dive on Vimta Labs, the picture seems pretty clear. We've seen really robust Q1 financial performance. We've seen strategic moves like the divestment to sharpen their focus on core strengths like pharma and food testing. We've seen major validation through those zero-observation FDA inspections and EMA compliance.
Highlighting that critical quality edge.
And they have a strong competitive position, #1 in several key Indian markets, backed by great infrastructure and a clear strategy for future growth in expanding markets.
It really is a case study in how consistent execution, combined with strategic focus and an unwavering commitment to quality, can drive impressive results in a demanding industry. And this deep dive, it really highlights something interesting. It shows how a company can really boost its market position, not just by chasing revenue, but by, strategically refining its focus and absolutely doubling down on quality and compliance, especially in these highly regulated fields. So maybe a final thought for you to consider in your own work, your own industry. Is there an aspect of quality or compliance that maybe gets overlooked? Could elevating that become your surprising key to unlocking new growth or differentiation?
That's a really powerful question, something for all of us to think about. Thank you for joining us on this deep dive into Vimta Labs Limited. We hope these insights spark some connections for you.